You're taking 20 trades a week and somehow still losing money. Meanwhile, there's a trader down the hall taking 3 trades a month and consistently profitable. What's the difference? It's not luck, it's not capital, it's not some secret indicator you don't have access to. The difference is simple. They've figured out what you haven't. One perfect setup is worth more than 20 okay ones. But you don't believe that, do you? You're still out here hunting for trades like you get paid per click, checking every time frame, watching every pair, convinced that more opportunities equal more profit. Here's the truth that's going to hurt. Every mediocre trade you take isn't just a small risk. It's actively destroying your account and your psychology. And the worst part? You think you're being productive. You think you're putting in the work. You're not. You're gambling with extra steps. So why does one good setup beat 20 mediocre ones? Let me break down exactly what's happening every time you lower your standards and take a trade that's just okay. The math that's killing you. Let's start with something simple. Math. Most traders never actually calculate what mediocre trading costs them. They just feel like they're busy and assume busy equals profitable. Let's say you take 20 trades in a month. Your win rate is 50% because these are mediocre setups. No real edge. Just coin flips with fancy charts. 10 winners, 10 losers. Sounds balanced, right? Wrong. Because of one thing you keep forgetting. Transaction costs. Every trade you take costs you money. Spreads, commissions, slippage. Let's be conservative and say each round trip costs you $5 in a small account or half a tick on a futures contract. 20 trades. That's $100 in cost before you've made a single dollar in profit. Now let's say your average winner makes you $50 and your average loser costs you $50. 10 winners at 50. That's $500. 10 losers at 50. That's negative $500. You're break-even on the trades themselves, but you're down $100 in costs. You didn't just waste your time. You paid for the privilege of wasting your time. But here's what really happens with mediocre setups. Your win rate isn't actually 50%. It's lower because these setups don't have a real edge. Let's say it's actually 40%. Now you've got 8 winners and 12 losers. 8 times 50, $400 in winners. 12 times 50, $600 in losers. That's negative $200. Add in your $100 in transaction costs and you're down $300 for the month. All because you couldn't sit still. All because you convinced yourself that taking action was the same thing as making progress. Meanwhile, the trader taking 3 high-quality setups, let's say they've got a real edge. 70% win rate because they're only taking the absolute best opportunities. 2 winners, 1 loser. 2 times 100, $200 in winners. 1 times 100, $100 in losers. That's $100 profit. Subtract $15 in transaction cost for 3 trades and they're up $85. They took 15% of the trades you took, and they're profitable while you're not. That's the math you're ignoring every time you talk yourself into a mediocre setup, the psychological cost. But the math is actually the smallest part of the problem. The real damage from mediocre trading is psychological. And this is where most traders completely destroy themselves without even realizing it. Every time you take a mediocre trade, you're training your brain that standards don't matter. You're teaching yourself that it's okay to bend your rules. It's okay to take setups that don't quite fit. It's okay to trade out of boredom or impatience. You think it's just one trade. Just this once. But your brain doesn't work that way. Your brain is a pattern recognition machine. Every time you take a mediocre setup, you're reinforcing the pattern that mediocre is acceptable. Then when a truly great setup comes along, you can't recognize it anymore. Your judgment is so polluted by mediocre that you treat the great setup the same way you treat everything else. You size it the same. You manage it the same. You exit it the same. You can't tell the difference anymore between a 20% probability setup and an 80% probability setup because you've been taking them all. Compare that to taking one great setup. You wait. You watch. You stay patient. When that setup finally appears, you know it's special. You've seen enough mediocre setups to recognize when something truly high probability is in front of you. You take the trade with confidence. Not hope. Confidence. Because you know the odds are in your favor. If it wins, great. If it loses, okay. It was still the right trade to take. Your emotional state isn't dependent on one outcome because you're focused on process, not results. You're not swinging from high to low and back again. You're steady, and that steadiness lets you think clearly. Make better decisions. Stay disciplined. That's the psychological advantage of waiting for great setups. It's not just about the trade itself. It's about preserving your mental state. What makes a setup truly great? So what actually separates a great setup from a mediocre one? Because most traders think they're taking great setups when they're really not. Let me be specific. A great setup has multiple confirmations from different sources. Not just one indicator saying buy, not just price at a level. Multiple factors all lining up at the same time. Trend alignment. Maybe you're trading with the overall trend instead of trying to pick a reversal. The daily chart is bullish. The 4-hour chart is bullish. The 1-hour chart just pulled back and is starting to turn bullish again. Everything is pointing the same direction. Key level confluence. Price isn't just at any support or resistance. It's at a level where multiple factors converge. Maybe it's an old swing high. Maybe it's also a round number. Maybe it's also the 61.8% Fibonacci level. Maybe it's also where the 200-period moving average sits. When you've got 3 or 4 different reasons why price should react at a level, that's confluence. That's a great setup. Volume confirmation. If you're trading a breakout, is volume expanding? If you're trading a reversal, is volume showing exhaustion? Great setups have volume telling the same story as price. Indicator alignment. If you use indicators, are they all in agreement? Is the RSI confirming momentum? Is the MACD confirming trend? Are multiple indicators all saying the same thing? One indicator can lie. 3 indicators all in agreement are harder to ignore. Risk, reward clarity. In a great setup, you know exactly where you're wrong. Your stop-loss placement is obvious. It's at a clear level where, if price hits it, the setup is invalidated. And your potential reward is significantly larger than your risk. Not 1-to-1. Not 1.5-to-1. At least 3-to-1. Preferably 5-to-1 or more. Great setups offer asymmetric risk-reward where you're risking 1 to make 3 or 5. Timing precision. A great setup isn't just the right conditions. It's the right conditions at the right time. Maybe the market just released news and volatility is expanding. Maybe it's the London Open and liquidity is high. Maybe it's the first pullback after a strong trend day. Timing matters. A great setup has all of this. And you know what? Those setups don't come along every day. They might come once a week, once every 2 weeks, sometimes once a month. And that's okay. Actually, it's better than okay. It's perfect. The opportunity cost nobody talks about. Here's something that's going to change how you think about mediocre trades. Every mediocre trade you take has an opportunity cost. Not just the money you lose. Not just the psychological damage. Actual missed opportunity. When you're in a mediocre trade, your capital is tied up. Your attention is tied up. Your mental energy is tied up. And while you're managing that mediocre position, watching it go nowhere or slowly bleed, the great setup you've been waiting for appears. But you can't take it. You're already in a trade. You don't have the buying power. You don't have the mental bandwidth to manage 2 positions. So you watch the great setup trigger without you. You watch it run exactly as you knew it would. And you're stuck in your mediocre trade that's going to end up being a small loss or a break-even. This happens more than you think. Traders tie up all their capital and attention in 5 mediocre positions, then the one trade of the month shows up and they can't take it. They're too stretched, too distracted, too committed to their mediocre trades. I learned this the hard way. I used to trade every single breakout I saw. Didn't matter if it was clean or messy. Didn't matter if volume was there or not. I just wanted to be in the action. One day, I'm in 3 different breakout trades. All mediocre. All going sideways. Then I see it. The breakout I'd been waiting for all week. Perfect setup, huge volume, clean level, multiple time frame alignment. Everything. But I'm already maxed out on risk. I can't take another position. I watched that trade run for 7 times what I would have risked. 7 times. While my 3 mediocre trades ended up being 1 small winner and 2 small losers. Net result? Basically break even. Opportunity cost? The biggest win of the month that I completely missed. That was the day I realized that being in mediocre trades isn't neutral. It's actively harmful because it keeps you from taking great trades. The focus advantage. When you're only taking one great setup instead of 20 mediocre ones, you can give that one trade the attention it deserves. You can plan it thoroughly. You can identify the exact entry you want. You can determine the precise stop-loss level. You can calculate multiple profit targets. You can think through different scenarios. What if it moves fast? What if it consolidates first? What if there's a fake out? When you're taking trade after trade after trade, you don't have time for this level of preparation. You're making decisions on the fly, reacting instead of planning. And reactive trading is losing trading. The trader taking one great setup spends hours analyzing it. They've looked at it from every angle. They've considered what could go wrong. They've prepared their mental game for managing it. When they enter that trade, they're not hoping. They're executing a well-thought-out plan. You can't do that when you're juggling 20 trades. You're spread too thin. Your analysis is surface level. Your preparation is rushed. Your execution is sloppy. And your results reflect that. There's power in focus. There's edge in preparation. Great setups allow you to bring both. Mediocre setups prevent both. The compounding effect of quality. Here's something most traders never consider. Quality compounds. When you take a great setup and it wins, that win is usually significant. It's not a small profit. It's a real profit that moves your account. That profit gives you more capital to risk on the next great setup, which gives you an even bigger profit when it wins. Over time, this compounds. 3 great setups that each return 3 times your risk can turn a $1,000 account into over $2,000. But it's not just about the money. It's about the confidence. Every time you take a great setup and it works, you're reinforcing the right behavior. You're teaching your brain to be patient, to wait for quality, to trust your process. This confidence makes you better at spotting the next great setup. It makes you more patient, more disciplined, more consistent. Quality creates a positive feedback loop. Mediocre trading creates the opposite. When you take 20 mediocre setups and 15 of them lose or break even, you're reinforcing doubt. You start questioning your system, questioning your analysis, questioning yourself. This doubt makes you hesitate on good setups, makes you second-guess your decisions, makes you less confident in your ability. Mediocre trading creates a negative feedback loop that's hard to escape. And the more you do it, the deeper the hole gets. Professional traders spend most of their time waiting. They're analyzing, yes, but they're not trading. They're waiting for their specific setups to appear. And when those setups don't show up, they don't trade. They don't force it. They don't lower their standards. They just wait. Because they know that patience is part of the edge. The ability to do nothing when there's nothing to do is a skill. Maybe the most important skill, but it feels wrong. It feels lazy. It feels like you're missing out. You see other traders posting their entries and exits, and you think you should be doing the same. So you find a reason to take a trade. Any trade. Just to feel productive. Just to feel like you're participating. And that trade costs you money. Costs you confidence. Costs you the opportunity to take something better. False productivity is one of the biggest account killers in trading. And most traders never realize they're doing it. How to identify your one great setup. So, how do you actually do this? How do you shift from taking 20 mediocre setups to waiting for one great one? First, you need to define what great looks like for you. And I mean specifically define it, not just I'll know it when I see it. That's not good enough. Sit down with your trading journal and go through your last 50 trades. Identify your best 3 to 5 winners, not just the biggest wins. The trades where the setup was clean, the execution was smooth, and the outcome was strong. Now analyze those trades in detail. What did they have in common? Were they all trend continuations? Were they all at major support or resistance? Were they all during a specific session? Did they all have certain indicators aligned? Write down every single commonality you can find. Those commonalities are your edge. Those are the characteristics of your great setups. Now turn those characteristics into a checklist. A great setup for you needs to have these specific things. Not most of them. Not some of them. All of them. This becomes your filter. Every potential trade has to pass through this filter. If it doesn't check every box, you don't take it. Period. I don't care how good it looks. I don't care how much you want to trade. If it doesn't meet every criterion on your checklist, it's not a great setup. It's a mediocre setup. And you don't trade mediocre. The waiting game. Once you have your checklist, the real challenge begins. Waiting. This is where most traders fail. They create the perfect checklist. They know exactly what they're looking for. Then they can't handle the waiting. 2 days go by. No setup. 3 days. 4 days. They start getting anxious. They start looking for reasons to bend the rules. Maybe this setup is close enough. Maybe I can take this one even though it only checks 4 of the 5 boxes. No, you can't. Because the moment you start making exceptions, you're back to mediocre trading. You're back to taking 20 setups instead of one great one. You have to embrace the waiting. You have to accept that great setups are rare. You have to be okay with doing nothing for days or even weeks if that's what it takes. This is the hardest part. Not the analysis. Not the execution. The waiting. Your brain is going to fight you. It's going to tell you you're wasting time. It's going to tell you you're missing opportunities. It's going to tell you that other traders are making money while you're sitting on your hands. Ignore it. All of it. Because here's what your brain isn't telling you. Those other traders taking all those trades? Most of them are losing money. They're busy. They're active. They're engaged. And they're slowly bleeding their accounts. You're not missing out. You're protecting yourself. Create a waiting routine. The real game. Trading isn't about being busy. It's not about activity. Opportunities will always come. The question is whether you'll have the patience to wait for the great ones and the discipline to skip the mediocre ones. That's the real game. And it's a game you can win if you're willing to play it right.